In today's combination tutorial and web lesson, I'm going to be covering backtesters. These are tools that I use to backtest various strategies to determine whether they're profitable or not and worth trading. As with all my tools, the most important thing is that you read the disclaimer first. These tools are for educational purposes only. They are beta versions and still under development, so if you use them, you do so at your own risk. That said, I have made every effort possible to make sure they are accurate and error-free. The first thing I want to point out is that this is not a data mining backtester. It's not built for reverse engineering. What it does do, though, is once you have your strategy in place and you have a trigger that gives you a buy signal, or if you're shorting a stock, a sell signal, you can backtest it to see what the results are. I have three types of backtesters: swing trading, position trading, and long-term trading. The difference is that swing trading uses daily data, position trader uses weekly data, and long-term investor uses monthly data. And that's approximately 127 periods. So if it's daily data, it would be 127 days. Weekly data, 127 weeks, and so on. The first thing you need to do is you need to put in your data provider. If you're using an end-of-day data provider, you can use a free one like Yahoo, or you can use your broker or IQFeed or any other number of data providers that XLQ will accept. So you can see we've put the data provider Yahoo in here. Whenever you see a red cell with a white asterisk, you'll find that there's a note with some helpful information. The next thing you would do is enter the symbol, the date you got the trigger or signal to enter the trade, and then if you want to make a notation of what strategy, you can. Each backtester allows up to 600 tickers. You can test one strategy or you can test a combination of strategies. The data that's in here is just for example. It's completely hypothetical. Then you enter how much capital you're willing to allocate for the trade. And lastly, you put the number of days that you're in the trade. The backtester will generate your profit and loss results, as well as your maximum favorable and adverse excursions and your in-trade drawdowns. All three of those are based on closes, and all entries are based on the open price. That way there's continuity and consistency with your backtesting. We're going to start at the end of the backtester. There's your 127 periods of daily data, and the red, or the light pink I guess, is the low of the day. Then you see a green section with the same amount of intervals. That was the high of the day. Then you'll find the orange is the open of the day, and the light blue is the close of the day. So should you want to go and investigate further and see exactly what the high, the open, the low, or the close was for any given ticker on any given day, that's where you would look. Now we go back to the beginning and we see that if you entered on the 6th, for example Facebook 2014, at the open, it shows you the entry price, it shows you how many shares you could purchase with the allotted capital. It does not take into account your stop size, however. That would simply be the maximum shares you could buy with $10,000 of capital. When you enter how many days you're in the trade, it will automatically tally what the exit date and the closing price was. Then it will calculate the P&L in a percent and dollar amount. Any font that you see in blue is data that you can enter. It's pretty much these 5 columns. Next, it'll show you what the most favorable excursion was during those 5 days, what the highest close was during that trade, what the lowest close was during that 5 days that you were in Facebook, and then it'll tell you, compared to your exit, the closing exit that you took, what the highest exit was that you could have gotten out of the trade. So in this case, when it says 0, it means that this trader would have had the very best close possible in that 5-day range. If you scroll down to the bottom, it will tally all of your trades and it will compare to how much capital was required. It then gives you a collective total of what your net and gross profit and loss would be, what your profit factor is, It allows you to enter your round-trip commission fees, and then gives you a total gross profit minus those fees and a net profit minus those fees. Now this particular section is based on the total capital it would require to make all of these trades, whereas the individual ticker is simply based on that one trade and that one amount of capital. The next section is the percentage change. Each one of these numbers represents a day in the trade. So 0 would be the date that the trade opened. If you look at Facebook, you can see that on the first day you would have made 1%. And the way this is structured is it's a collective. So for example, on the third day, you would be up 5% total from your entry. This isn't for the percent change on that individual day. It's a collective percent. So if you stayed in the trade 10 days, you would be up 11%. So it gives you the cumulative change over the number of days that you are in the trade. So if you stayed in for 20 days, you would have been up 13%. Then you scroll down, and now you have cumulative results. So that takes it for the entire day, all of the trades. Let's pick 5 days. All the trades that are listed here for 5 days, your total trades would have been 539, your winners would have been 294, and your losers would have been 245. It then gives you the percent profitable and unprofitable. It gives you the maximum cumulative gain. It gives you the maximum cumulative loss, average profits or losses, standard deviation, total cumulative net change for all the tickers, average trade, average win, average loss, average win-loss ratio. And the gray section is for percent changes. You have the exact identical thing in the beige section, except it's the cumulative dollar change, and it's also based on the number of shares that you were able to enter the trade with, given your allotted capital. For Facebook, if you were in the trade for 5 days, you would have made $955 given the capital allocation of $10,000 and with 163 shares. And just a reminder, that is not with a stop. That's simply the maximum size you could have had, the maximum position size you could have had. Go to day 15. If you'd stayed in the trade for 15 days, you would have been up $1,200. And like the gray section before it, if you go down, it'll give you the same data, the same cumulative data for all the trades that you were in for 1 day, for 2 days, for 3 days, for 4 days, and so on. But it gives it to you in a dollar amount instead of a percentage amount. After that, if you want to look more closely at the maximum adverse and favorable excursions, they're up next. The green for longs is favorable excursion. Again, the horizontal read is for that ticker only and for that specific number of days in the trade. That's based on the entry open date versus the highest close. Like the preceding section, this area is for the collective whole, the cumulative. So for all the trades that you were in for 4 days, here was your maximum favorable excursion, your minimum, your average, and the standard deviation. The adverse excursion is set up the exact same way. For longs, it's the entry open price versus the lowest close. And then exactly the same with in-trade drawdown, where it examines for longs your highest close versus your exit close. It's a lot of useful data in terms of backtesting a strategy and the results that you get. What I really like about this is you can change the number of days in a trade. A simple way to do it for all trades is to hit enter the number that you want, and you can see this little dot on the corner of the cell. Get your crosshair on it and double click it. Another way you can do it is you put the correct number of days that you're interested in, hit Shift, Control, and the down arrow, and then Control D, and it will fill in the number of days all the way down. So that's a quick way to make changes to everything. But you can compare and see how you would have performed individually and collectively by staying in a different number of days. You can do a different number of days for each one or all the same. Over here we have the summary page, and basically it takes all the data from over here, from these sections at the end, all the ones that I've shown you, and puts them in an easy to find and read format. Favorable excursions, adverse excursions, end trade drawdowns. There's your cumulative data for all the trades based on how many number of days you were in the trade in a percentage amount, and then again in a dollar amount, and then the P&L based on the capital required to make all these trades. One thing a lot of people really seem to like is the charts. You can see the cumulative total net change for all trades based on how many days you were in the trade. So you can, in many ways, you can quickly and easily find overall what the optimum number of days would have been to be in that trade. Now obviously each individual ticker is going to perform differently, but when you're looking at a strategy as a whole, it can be very revealing as to how the strategy performs over multiple time periods with a variety of tickers. And that gives you clues as to how robust your strategy actually is by examining everything collectively as opposed to just an individual trade and an individual ticker. Another thing you should consider when you're looking at your results is I would compare the time that I was in the trade to what the general market was doing. Was it in an uptrend or a downtrend? Was volatility declining or expanding? Those are two very important elements that have a tremendous impact on all strategies that most traders ignore. So there are 6 backtesters total, 1 for swing longs, 1 for swing shorts, 1 for position longs and position shorts, and 1 for long-term trader longs and long-term trader shorts. And even if you don't want to use the same trading tools or the same backtesters that I use, I would encourage you to use something so you can see if your strategy really has an edge or not. Without a strategy that has an edge, it's nearly impossible to become consistently profitable as a trader. In order to be a consistently profitable trader, you need a repeatable process that you can follow consistently. As you can see, this backtester is pretty easy. I'm always a big fan of anything that's simple and streamlined. I would say this about backtesting. It's not just enough to backtest and have statistics and data. You need to be able to apply it in an actionable way. You need to be able to integrate it into your trading in a functional way, in a pragmatic way, in a way that improves your results. If you can't translate that into action and it doesn't directly or indirectly improve your performance, then it's a waste of time. Statistics and data in and of themselves are meaningless unless you can use them and use them effectively. I'm only going to do one video for all 6 backtesters because the concepts are all identical in each one. And it looks like that's it for now. So thanks for watching. Good fills, everyone.